Did you know your home could be your most powerful financial tool? If you own a home, you may have access to something called a home equity line of credit, also known as a HELOC. Think of it like a credit line that's backed by the equity in your home. And the best part is, you only use what you need. Here are 5 powerful ways homeowners use it. 1, home renovations or upgrades. 2, paying off higher interest debt. 3, funding business opportunities. And 4, covering college expenses. Or how about number 5, creating a financial safety net. And unlike a traditional loan, a HELOC gives you flexibility. You can draw from it when you need it and pay it back over time. For many homeowners, it's a smart way to make your equity work for you instead of just sitting there. If you're a homeowner and you're curious about how much equity you could have access to, let's connect. Your home might be holding the key to your next financial move. A home equity line of credit is a good tool to utilize because not only do you get to access the equity in your property, you get to pay it back over time, but then you get to also use it again, right? And so it's like an ongoing line of credit that you continuously have open and available to you. It's especially good for unforeseen expenses, right? Life happens sometimes and you may not have the liquidity in a savings account, but you have that equity line of credit on standby that you have to access in the event that something happens and you need money fast. So I'd recommend an equity line of credit to clients that are interested in different ways that they can access their equity in their property. A client that may not have an immediate need right now for the money, but may have something coming up in the future, or even for an investor. Right? Maybe an opportunity presents itself where you can pay cash for something and get a better deal and you might not have that liquidity and savings. You have that line of credit that allows you to access and tap into the funds and get that better deal or take advantage of whatever promotion is available. I feel like people are familiar with lines of credit, but may not know all the different ways that you can utilize it to your benefit and make the money work for you, or maybe different ways that you can make the money make you more money or use the money to make you more money. So the interest rates on an equity line of credit tend to be a little bit higher than a fixed rate mortgage. Equity lines of credit are based on a 10-year repayment plan versus a fixed mortgage is typically like a 30-year mortgage. So it's a lower fixed interest rate, whereas an equity line of credit tends to be a variable interest rate program. When you have an equity line of credit with a first mortgage, you're responsible for 2 monthly mortgage payments if you have a balance on both. So a lot of people are like, I don't want to make 2 payments. And so that can make people nervous a little bit. And with the equity line of credit, you can get a HELOC, like a loan, which is where you take a fixed amount out and that's at a fixed rate versus a line of credit can be a variable interest rate. So it just depends on people's comfort levels. But the biggest thing that I hear pushback is having 2 payments. People may not like that.